So hi guys, it's Nat Wilson here from the Kingston Collective, and today we are talking money matters with Suzannah and Shane Debonardi from Southeast Financial Group. Hi guys, thank you for joining us.
Hey, thanks for having us.
Hey, welcome. I was practicing the Debonardi and I stumbled on it anyway. I knew it was going to happen. So before we kick into it, can you just tell us a little bit about you guys, how long you've been in the industry and a bit more about Southeast Financial Group?
Yep, perfect. So Shane and I have been working together for about 6 years now, but more recently, just less than a year with Southeast Financial Group, our Southeast Financial Group. We've combined experience in financial services of about 20 years.
So yes, yeah. Combined, yeah.
Combined.
Yeah. Don't
want to make you too Suzannah,
old.
Yeah, mainly me, but yeah. But
nice, yeah.
But yeah, no, we have a blend of skills and experience. So we're both mortgage brokers. Shane is our certified financial planner, and I bring a lot of corporate and small business practice operational experience. So got a bit of a mix there, which is good.
Yeah, perfect. And you cover off a broad range there as well.
Yeah, we do. So we set the business up remotely. So I'm based in Kingston. But normally we'll be on the road visiting clients, but
during normal times,
but technology's working perfectly for us too, so hasn't really stopped us, which is great.
Nice. Especially with Zoom, you can have a meeting with anyone anywhere these days, can't you?
Absolutely.
Yeah,
amazing.
Perfect.
All
right, well, thank you, and also thank you for signing up to the Kingston Collective Business Directory as well, and joining our Facebook group. Really appreciate it. So we'll dive in. If anyone's got any money matters questions, we can ask as we go along. Otherwise, we've got some key topics that we'll cover, and we can go from there. So let's start off. If you've got, say, some key points on how to manage personal cash flow, which can then be applied to your business as well. So you're saying often they can be linked.
Very much so, So
if you can kick us off.
Yeah, cool. Thank you. So when we start with our clients, we start with a bit of a wellness journey, and what that really consists of is getting into an individual's goals. So what's really important for them, getting them to think about and visualize what is their ideal lifestyle, because we find sometimes that people don't really know what their goals are, but that's what we're here to do, is to help really clarify, because it's really important.
So you need something to be working towards.
Yeah, exactly. And a lot of it's going to set up, your goals are going to set up what investment decisions you're going to make today. So it's really important, if you've got a partner, business partner, personal partner, ensure there's alignment, clarify your goals, write them down. Big one. And what I like to do is have them, pictures posted up around the house, so it's in your face every day.
It's a real visual.
Yeah. So that's really
like
important.
Yeah. Okay.
Definitely. So goals, number one, and thinking about ideally next 12 months, 5 years, and then longer term as well. I'd say.
Would you go any longer than 5 years? Like if you were talking goals, do you think that's the longest you would go, or would you suggest a 10-year goal?
Yeah, probably longer as well. So short, medium, long is probably what I'd suggest. And, thinking about your retirement. Going as far as, visualizing what does that look like for you? How much money do you want to retire on? Do you want to be holidaying annually? So yeah, definitely.
So if I put a picture of, a cocktail in the Bahamas, that's the type of thing we're talking.
Perfect.
Okay, I like that one.
Yeah.
I suppose as well, we've got client goals. It's not just about, the bottom dollar or the dollars around it. We've got clients that are starting families that we, prepare them for, and want to go travel every 2 years, or they want to, do these things and get their children through education or private education. So it's not always about, I want to save this much money, or I want to build up this great big portfolio. It's really, for us, it's all down to the lifestyles as well, and actually making sure that people are living the lives they want to, and us helping them out along that sort of path. So that's really cool as well.
Yeah, it's important. something so many people don't do.
Yeah.
Absolutely.
And I will put up my hand and admit to that. Yeah.
yeah. Life gets in the way, right?
So yeah, that's right. Yeah. You have kids and you just get through, and you know, school fees come in, and but it makes sense having the goals and being prepared for it.
Absolutely. Yep, definitely. Yeah. So then I would say the next key thing would be to move into understanding your current cash flow situation. So what are your inflows? What are your outflows? Thinking about and reflecting upon what are your spending habits, and be realistic. What's your relationship with money? And again, talking about that with someone, bounce ideas, get some feedback as well. Because I think what we sometimes don't realize is where our money is going. So there's tools out there to help track, get the data and analyze and have some really interesting conversations around how do we now link that back to our goals? Because we might have trade-off conversations that we need to give up this so we can achieve this goal over here.
Yeah. And that makes sense. And it is true. You get to the end of the month and often you go, where did the money go? Like it's just gone. It's like you're sitting there and it's just being dished out all the time.
Yeah, that's a good one.
Okay. I like that. Yeah.
And it changes your mindset as well when you start spending. But if you start aligning, you know, your cash flow towards your goals as well, it actually changes your mindset, because you're giving up a goal. You're potentially foregoing your holiday, or you're foregoing your long-term wealth because you're spending X, Y, and Z over here. And that's probably a clarity thing that we do with our clients, is sit down and actually go through and then have that conversation to say, hey, well, what are we compromising here? What are we doing, and what are we going to give up to make sure that, you know, you can do what you want to do? So
yeah, that's great. That's great advice.
So flowing on from, you know, getting your data, tracking your expenses, then coming up with your budget. So where you want to allocate your money, and that's where you might hear sometimes people talking about bucketing money.
Barefoot investor.
Yeah, exactly.
He's got his
Things
buckets,
like that. Yeah, it's very popular. So
Shane shaking his head,
But setting up a budget, that's really important to then flow into. So you've got, you're tracking your expenses, you've got your budget. Now it's setting up your foundations. So everything that supports you. So your bank accounts, you know, looking at how your debt's structured. Are you using offset accounts? So it's your infrastructure and your foundation of how are you set up?
Yeah.
Personally, you know, have you looked at all of your utilities? Are you getting the best deals and everything? So it's really tidying everything up. Foundations are set to then move forward. And then as part of that, it's really important to have your ongoing reviews structures in place. So, you know, with your partner, your business partner, whatever, make sure you're reviewing all of these things frequently. So,
and when you say frequently, you mean annually?
It depends, right? So my partner and I will make him do it monthly.
Yeah.
So, you know, we set up the budget annually, we track monthly. Personally, I look at things like on a weekly basis, but then I might check in on him and say at the end of the month, hey, you know, we spent here up big and, you know, we might need to adjust for the next month.
Yes.
But in terms of our clients, we have a variety of clients. So some do want that accountability. So we do catch up with them monthly to have something similar.
Yeah.
Otherwise, some clients say, can you just check in 6 months' time? Or can we just have an annual review? So again, it just depends on what are their goals.
Yeah.
As to how frequent they want that support.
Yeah, right. So it's up to the individual needs, I suppose.
Yeah, definitely. Yeah.
Perfect.
And I laugh at you. I did laugh and shake my head a little bit at the barefoot investor comment there. But the other reason I did that is because, you know, that's a book on paper. We understand, and we've got heaps of clients, and one strategy and one method just doesn't work for everyone. This is the way we do it. It's very, you know, personal, and everyone's different, and everyone's got different goals, and everyone's got different types of income. Some people have, you know, lots of money coming through, and some people don't, and we understand that, but it's still going back down to the basics and really getting them to understand and us to understand, and then working what they have. It's not, you know, it's not about telling people that you need to earn more money, because people just don't have that option sometimes. So it's about just managing it that way.
Yeah, for sure.
Just to close off that bit though, just to relay it back to a business, you do the same structure, right? Like you start your business, you set up your business plan, probably a strategy, 1, 3, 5 year, whatever. But similarly, you'll have your goals, you'll set your milestones. Again, you'll set up your business budget, you'll track your tools, track your inflows and outflows, so your cash flow. You know, we use a tool, Xero is what we use for our cash flow monitoring.
Yeah.
Again, I make Shane sit down monthly and then we review all of that.
It was 10:30 last night, actually, being the end of the month, but that's okay.
Yeah, 31st.
Okay, yeah.
Yeah.
So you have a set day that you do it, you go through it, you review it all. Yeah. Perfect.
Yeah.
And so that can be applied to business or,
absolutely,
you know, your partner at home, partner business.
Definitely.
Yeah. Okay, now it makes sense. So going back, so Hannah, hi Hannah, thank you for watching. So Hannah has got a question now. This was Shane, you were just touching on this before when you were talking about apps and tools. So Hannah's asked, what apps and tools would you recommend? So this was point 4 we were talking about.
I mean, there's things like, and don't get me wrong, everything here is obviously general advice. So we don't understand your situation. We'd love to. And if you want to reach out further with personal questions, we're more than happy to help. But, you know, things like, you know, pocketbooks is always good. Anything that can data feed and live stream across your expenses from your bank account's always good. I know some of the banking is sort of improved a lot in terms of, you know, CBA, Macquarie, all those sort of banks have now built those kind of apps in where they'll start to categorize it. But it's then having the time and the energy to sit there and categorize it yourself to get your rules and things set up. Suze, any others you've got in mind?
Yeah, look, back in the day, I used to use spreadsheet. But we're really fortunate now we've got these tools on our Facebook business page. Actually, we've got a post about tracking your expenses, and on there, you know, a couple that we've tried is Follow, Pocketbook, or Xero as well, or Spreadsheet's fine too. Yeah.
I suppose for you know, for business, using things like Xero is worthwhile. For personal expense tracking, you know, because I can't remember what the basic plan for Xero is. I think it might be $25 a month though. So for someone who doesn't want to pay the additional fee to track their money.
Yeah, it's probably something like a Pocketbook or Follow, which is really low cost and really simple to use. And what I would say, if you are going to use an app, try and be disciplined and commit yourself to doing it. So that would be categorizing, you know, daily, every second day, for expenses that auto data feed through, because if you leave it to the end of the week or the end of the month, it can get too overwhelming to try and categorize everything. And then it will just fall flat.
And time consuming too.
And we also have a tool that we use in terms of, I suppose, for our debt solutions that actually data feeds from bank statements, past history. So we can sit down and data feed back and grab your expenses and then have a look through them and help categorize them and make sure they're all sort of on track. And that's sort of one of our lending parts that we need to do anyway as part of broking and mortgage broking. So that's something that we use for our clients.
It would be a really useful, helpful tool.
It's a little bit scary sometimes, but it's good.
Well, it's a good insight into, you know, where your money does go. Especially if it's not something you've sat down and looked at before. Okay, so I hope that helped, Hannah. Any other questions, please let us know. Okay, so in terms of the tips, I think we had 5 to cover off. We've covered off on those. So talking debt, so this is a good segue. We're just talking about debt. So in terms of debt solutions, as self-employed, what are the benefits of working with a mortgage broker for personal refinancing or business refinancing, or even expansion opportunities?
I think personally it's just about exposure and what's on offer. I mean, a mortgage broker and what we have, you know, multiple lenders sort of up around that 30 lender mark in terms of what you can get. And in terms of what's on offer, and there's, you know, mid-tier banks, smaller lenders that have sharper rates and ones that specialize on a self-employed side of things, some that, you know, want 1 year's financial, some that want 2 years financial, so that it's all those things that you just can't walk into a bank knowing, and we as the brokers know that, and then it's about again, it's then underpins everything. If you've got the right debt in place and the right mortgage, you're potentially reducing your interest rate, reducing your costs, and then you've got starting to really open up that cash flow, or that ability to then, maybe free up some cash flow and pay down debt, or maybe, free up some cash flow and invest some money. So it kind of underpins each other in that sense. And that's what's really good. You walk into a mortgage broker, and what we offer is, because we have that financial planning background as well, we have that approach to say, well, here's your loan, but how are we actually going to pay it off? Well, we're going to help you pay it off, sooner, or try and work out a strategy that's really going to work well with you in that sense. So
yeah, great. And I suppose when you are self-employed too, it is so much harder to get a loan, and knowing what the banks need and want from you, it would be a lot, it's quite intense and can be frustrating.
Yeah.
So
and even in times like now, COVID and things like that, they want that extra data. They want those extra things that are really difficult to. And it almost starts to get in that too hard basket if you've walked into a bank and they've given you a list. So we really, want to work with people and really help them out as much as we can by gathering this data for them, or getting the easy steps out of it, and trying to make the whole process a lot easier, and take that sort of stress away of saying, I need to refinance, but it's just too hard. I'm just too busy. I just can't do it. That's what we try and do.
Yeah. And you're right, the time consuming part as well.
Yeah, definitely.
Yeah. Absolutely. Yeah, great one. That was, I agree with that. And, having done it all before, I think everyone has refinanced for either business or personal before. So it's something we've all experienced.
Yeah, and rates at the moment are, mid twos, low twos, fixed and things like that. So there's still people out there paying a 3%, 3.5% for no reason, and they don't realise. And like I said, it started by a foundation of setting up the right foundations, having low interest rates to then be able to start doing your other things, and starting to plan to holiday, and starting to plan to travel, or things like that. And it just starts making things a lot easier when you start combining these things and doing just the little things to make big steps. So.
Yeah, and that ties into what you were saying before about doing a review of what debts you pay, and what have you been locked into for a long time. So the two connect there. Another point we wanted to talk about was for self-employed business owners is insurances, and having adequate protection. So personal insurances or business insurances, income protection, that type of thing. So are there must-haves that you suggest that people have?
Yeah, again, it's all on personal circumstances, and we, tailor our insurances from life insurance, permanent disability insurance, trauma, and that's, the case if you've had a heart attack, a stroke, cancers, anything like that. And everyone knows someone that's gone through those kind of events, and it becomes really difficult to, even work if your loved one's got something, or your business partner's not there to work with you, and they're off having to do stuff. So you want to protect outside. And then obviously income protection. We see people insure a $30,000, $40,000 car, but you're talking, if you've got 20 years of work left, you're potentially talking about $1 million worth of income you're going to earn over that period. And people don't think, and that's $1 million that if you can't work tomorrow, that you're no longer earning. You've got to then rely on other factors, or your partner to do the heavy lifting. And it's one of those things where you see people that come in, they're really excited about their goals and wanting to do all these things, and that part of protection and protecting their family, it's just really important for us as advisors. I've seen the downside of it. I've done claims. You can get trauma insurance for yourself and for your children. I've done a 3-year-old, unfortunately, that had brain tumor.
Oh, sad.
And you imagine working as a parent with your child with brain tumor. It's not possible. And
absolutely.
Fortunately, they managed to get a $100,000 payout through their insurance. So it just gives that
massive help.
And that relief to say, we don't have to go to work, or we can take time off. We can run around, do all these appointments.
Be where it's important. Yeah.
Both sides, and it's the same when you think about it. If you've got this business set up and you've had it for a long time and it's worth some money and things like that, you should be insuring each other as a business partner. If something happened to your business partner and you then have to pay out their share of their company, of your company, and it could really bankrupt you or ruin you. So things like that you're protecting each other as a partner, let alone your family, which is really important. And we structure these in the right way, that maybe through superannuation or partly through that can pay for it. So it's not a huge cash flow impact to say, I know I need life insurance and I know I need this insurance, but it costs this much amount of money and I'm just not willing to do it. But if it's through, your super and then you've got a strategy to pay it, then that's the way to do it. So they're really important to us, and it's one of those hygiene factors that people come in and, like I said, with these great goals and wanting to do these great things, and then we say, well, let's say what happens if, and that's really important for us.
Yeah, and have a backup plan. Yeah, correct, absolutely. Yeah. That's great advice. So we touched on before about, you talked about, retirement, and when you're setting your goals, what does your retirement look like? It's hard to think about when you're a bit younger as well. I don't want to think about retirement, but we should. So, thinking about superannuation and retirement planning as a business owner, and making sure that people are paying themselves super, having an offering for staff, small business, all of that sort of stuff. What's your, suggestions around that?
I mean, I think it's really good. And the greatest part of it is there is, those tax reliefs. You've got those concessions to put up to, potentially 25,000 if that's the only superannuation you're getting, and claiming a tax deduction on it. So if you're self-employed and you're paying all this tax, it's realistically thinking, well, I'll save that for my future and I'll be able to then save some money on the side. So you do it that way. I think that's a really good start. But then if you start chipping away into the superannuation fund and the idea of compound interest, which is, interest earning on interest, and that sort of snowballing effect, it builds up quite quickly naturally anyway. So you're not fortunate enough, you're out there working and paying yourself and doing all of the hard work, and no one's there to pay you the 9.5 to 10% of superannuation that you're entitled to. So it's realistic, that thought, and it's then about underpinning all your other goals. It may be a strategy that you're mid-30s, mid-40s, all right, and you want to do all these
Let's go with mid-30s,
mid-30s. You want to do these great things. You want to expand your business. You want to go on holidays. You want to travel. Well, let's do these things now, but let's have a consideration in a long-term plan to say, let's play a bit of catch-up. Let's grow your business and do the right things, and then really hound down on it. And retirement planning, at the end of the day, you're going to work and you're working in your own business, and for that, it could be 40 years of your own hard work, and there's an end goal there. You're going to have to sell up one day, or you're going to have to stop working. It may just not be possible. So you want to have that reward there at the end of it, and that's about providing that as well.
Yeah, for sure. Absolutely. Yeah, that's great advice. So there's so much here. Tapping back into the Facebook group. Hannah wrote, thank you for your tips before. You guys have covered a lot in half an hour, I have to say. You really, and everything you've said so far makes a lot of sense. But I think it's probably things that people aren't doing, personally and in business. So there's a lot of takeaways that you've provided here. So if people did want to, chat to you further, what are the best ways to get in contact with you guys to work with you?
Yep, absolutely. And we'd love to have a chat with anyone who would like to discuss their situation further. So, check out our Facebook business page. We've got a lot of tips on there around cash flow at the moment. But, email, our phone numbers are on our website as well. So either email, call, or Facebook, any of those avenues are fine, and we'll come back to you and chat.
Yeah, perfect. You can also find them on the Kingston Collective Business Directory.
Yes.
How is that for a plug? Nice one. Well, guys, thank you so much for your time today. I really enjoyed chatting with you. I know I'm going to be writing some notes down and implementing some of these things. I suppose it's just a matter of having time, isn't it? And sitting down and, reviewing all of that. But yeah, I appreciate it. It's been lovely meeting you, and I look forward to meeting you both in person one day.
Yes. Thank you.
Thanks for having us.
All right. Thanks guys.
Bye.
We'll chat to you soon. Bye.
Thanks.